Welcome back. You're with us on this special edition of Market Masters, Samvat 2081. We're in conversation with Manish Chokhani of Enam Holdings. Manish, let's talk about the one area where you have comfort, which is financials and private banks, which is where it's not really played out, right? HDFC Bank numbers came out and they're very healthy. I mean, almost opposite of what many others have done. And it kind of, their underwriting, etc., shown through. They slowed down on sort of unsecured credit, etc., at a time when others were sort of,
So,
what's the sense?
I love this because somehow everyone now thinks I'm the HDFC bull. It's one of the stocks in my portfolio. But to give context, like we said, in cyclical terms, when a market peaks, if you made a top in 2008 with all these industrials, it took them a period of time to come back, including the Reliances and all of the world also didn't come back till 2020. In the last decade, what were the stocks which performed? Quality, right? It was Nestle and Page Industries and Kotak and HDFC and the others. And it was understood this bull markets, they're not going to be the leaders. And while people think financials haven't performed, look at what happened to PSU banks.
Correct.
Look at what happened to small banks. I own, for example, IDFC and others. They've come roaring back. And it was expected that you'll go through consolidation in the sort of quality banks. And now others have also caught up to that quality. And you've got to a stage where the expectations are now so low from the HDFCs and the Kotaks and the Bajajes of the world that when you get this kind of result, we are celebrating because like it happened with PSU banks, I remember I used to say when you go from terrible to bad, it's a rate of change and that gives you a big jump in multiples, if not stock prices. The same thing here, that the expectation set is now so low in banks that the trend for price appreciation has become better. Having said all of above, banks are $1 trillion worth of market cap in aggregate. So we can keep finding reasons why they're not performing. The reality is $1 trillion and largely free float.
It's a lot of money to move it.
And it's free float. So if 100% of HDFC Bank has to be bought by someone or 100% of ICICI has to be bought by someone, it's not like a small cap where you can put few hundred crores and boom, the stock is up 50%. Here you need a couple of $1 billion. And that $1 billion, unless the foreigners come back, is not going to happen in a rush. So I think while we'll get this bump up currently in HDFC, I don't think the wall of domestic money is enough to push it up. Plus, they're capped at 10% holding in portfolios in the mutual funds.
Last time we spoke, you were cautious on mid caps, small caps.
Still am.
So they say fish where the fish are. Where are the fish?
No.
What areas?
Look, there's enough things to do in India. I think the point I was making is that people have been buying momentum. That if earning growth is 200%, I can pay 150 PE multiple. That is irrational, what is going on. And I was pointing out your return expectations have to now get muted because you compounded earnings at 24% in mid and small. That 24% ain't happening going ahead because if the whole economy is generally on a slower path and slower inflationary path, this is not happening. Even the sectors which are doing well, like say power we like a lot, but if ABB, Siemens are valued here and it's a cyclical stock, it takes a number of years of earnings to catch up. But your returns from a 50, 60 rupee price is very different. At that time, it was a 5 billion market cap. I could say in 10 years, it can get to 50 and I can make 24% compounding. At a 275 rupee price, to even make a 15% compounding to go to 120 billion is not going to happen. So it's just a price-based thing. In the market, there are enough things to do.
Like what?
So, again, if I go back to financials is number one. This whole energy, renewable energy kind of is area number two. The whole hard assets is area number three. And in that, what else have I done recently? Let me think. So I have renewables. I have an airline stock, for example, believe it or not, that there is a, hopefully a revival in that as well. And number of these things, we have still years to catch up with China, and there's fear about execution and so on over here. So there's enough to do. I mean, from an individual investor perspective, there's enough to do. And it's not a market which is going to crash, and therefore you say, I want to sit on cash.
It's a hold market, basically.
It's a hold. I'd be very happy if we go sideways. Because remember, my underlying theory still is, at some point we have a melt up in India. So I just reiterate the horses that you know best. And again, the names I just mentioned in passing, I'm not meaning to recommend, and they are tiny parts. But I I just say it's enough to do in the market rather than say, let me go and build 25% cash.
Absolutely. And in renewables, it's through financiers or?
No, not through
financiers.
financiers. You'll get enough over there. I mean, just look, there's enough.
Okay.
The whole power energy transition is still a big.
Okay. Anything else at all? I mean, any other corner, any new sector?
It doesn't, listen, I don't have to go shopping every day. I'm a farmer. I plant the seeds and I wait for the crop to grow. It may take 3 years. The longer it takes, the better, because you get the underlying compounding.
Yeah.
And I'm in no eagerness to harvest the crop.
Yeah.
Because I have no need to harvest the money and take it elsewhere. I'm going to be here invested in India.
Next Diwali will be higher or lower?
Next Diwali, if we get double digits from the index, I would be surprised. I think at some point, and there are a lot of stocks. Even remember, we've spoken in the past about EMS. Some EMS stocks are down 40%. And it's not like the story is over there. Some of them are over 100 multiple. Some of them are not. So you get things over here.
But you're saying you'd be surprised if you get double digits.
If you get double digits from an index perspective, despite the large caps being the store of value today, is difficult. And that tells you what likely to happen in the small and mid as an index.
It'll be a time for reflection and holding on to the horses that you know best, as you said.
So again, I just repeat what we said last time. Asset allocation, please think carefully. Within that, your basket of large, mid, small, please think carefully. Position sizing, please think carefully, because some of these, even in our portfolio, become disproportionate by performance.
Correct.
So it may be time to prune some of them just from a sanity perspective. And fourth is just count your blessings and go and enjoy with your family's Diwali. Stop thinking about making money off it.
Use it, right? Thank you so much, Manish.
Thanks for having
great
me.
conversation, and wishing you all the best.
Thank you. Wish everyone a very happy Diwali.